Good morning, traders. Another episode of Trader Talk here. This is Tuesday, the 18th of July, 2017. Had a little bit of consolidation after large moves on Friday on Monday. What we saw was dollar yen had a little bounce and it came back up to 112.80. It did fail at this 112.80 level though, and so the market now is testing out supports. In general, the US dollar is looking to go lower over time, so this is not abnormal price action. The euro is grinding towards 115. That sort of slow grind is a more dangerous sort of grind that suggests that the test is imminent and potentially powerful in terms of breaking it to the top side. The market's going to be watching these levels and looking at if we can break and hold above 115. Broadly speaking, a lot of traders are worried about the ECB and Draghi's attempts to talk down the market on Thursday. But it doesn't mean that we can't have a little test above in the next 48 hours and then perhaps stabilize above it and then put the ball in Draghi's court. If he was to talk it down, that's fine. Depending on what he says, there might be an opportunity to buy again. But if he was not to talk it down, then continuation higher is very possible. And then we're starting to look at 2016, 2015 highs, 116, 117. And broadly 120 is the target there as the ECB goes towards normalization via its tapering route. In terms of the other big moves in the market, we saw some sharp drops in the Kiwi dollar today. Now this is expressed through the Aussie Kiwi. This is the one trade that we have running at the moment, the long Aussie Kiwi, as it broke that 105.50 level last week. We got long, and now the market is rewarding our patience by a little bit of luck with some weak technical data out of the New Zealand with the CPI numbers. Now CPI numbers are very important for Australia and very important for New Zealand because both these central banks are inflation targeting banks, and as inflation missed, it actually came in flat for the quarter. The New Zealand dollar, which had been on a nice run, was sold sharply lower and towards threatening actually the uptrend. That's how fast the selling was. If you look here on the daily, you can see the size of the selling was substantial. And if we were to break some of these previous lows here, then the downside is quite significant, as the rally has been multi-weeks. So in terms of the weekly, sometimes it's good to just check what's going on in the weekly. That's pretty unheard of, sort of 6-7 weeks in a row up candles is pretty strong price action. So the market is always due for a pullback in those scenarios. Now it's got a reason to. So traders are looking to sell the Kiwi dollar on the rallies here, as it has a fundamental reason and is technically overbought. So you've got this reason now for the market to have a nice little pullback. Looking ahead, traders, we have the UK CPI numbers coming out. They're the key numbers for the pound and whether they're going to be raising rates or not later this year. Now the central bank has been starting to respond to the persistently high inflation. So if the numbers come in close to 3% tonight, forecast at 2.9%, then you can expect the pound to have a strong showing and potentially market start talking about rate hikes sooner rather than later. Puts a little bit more pressure on Carney, who has been trying to push back the market's expectations here that the Bank of England is going to be moving anytime soon. And with the pound above 130, it's well positioned to extend its rally if the economic fundamentals support it as well. All right, traders. Good luck today. It's if you have any questions or if you want to talk to an analyst, you have a dealing room in Sydney, a dealing room over there in Europe. You can contact us below in the YouTube. You can see Easymarkets broker there, and you can come through, sign up your account. If you join up in the VIP levels, you do get access to a personal analyst like myself or one of the many capable analysts here on the desk. Thanks, guys.